Before your feet touch the floor, before your brain fully loads the day, your phone lights up. Position liquidated. Not a dip, not volatility, liquidated. The market didn't correct, it punished leverage. Your margin account is wiped. Your emergency fund? Locked in assets you thought were safe. The S&P is down, tech is bleeding. Inflation is still hovering above comfort levels, and rent is due in 5 days. Now you're staring at your checking account balance, and it feels like a countdown timer. See, the illusion of wealth. You thought you were building wealth. You were building exposure. There's a difference. Wealth survives volatility. Exposure amplifies it. Most people don't go broke during the crash. They go broke in the months after, because that's when the cascade begins. Income slows. Expenses don't. Interest compounds. Stress rises. Judgment collapses. That's how decades disappear. The American reality. In the United States, millions of households live paycheck to paycheck. Credit card interest rates hover near historic highs. Auto loans stretch to 7 years. Student debt follows people into their 40s. One shock, a layoff, a medical bill, a market crash, and the structure cracks. You don't fail because you're lazy, you fail because your financial system wasn't built for impact. And the American economy, it moves in cycles. Boom, layoffs, stimulus, inflation, rate hikes, recession fears. You can't stop the cycle, but you can outlast it. Part 2, stop the bleeding. First rule of survival, stop the bleeding. Calculate your burn rate. Rent, utilities, groceries, insurance, minimum debt payments. Strip it to survival. Let's say it's $2,800 a month. You have $5,000 liquid. That's less than 2 months of oxygen. When oxygen runs low, panic rises. And panic is expensive. Scene 5, the panic trap. Visual, person frantically scrolling trading app. High-interest loan ads flashing. Crypto hype videos playing. This is when people make fatal financial decisions. They sell long-term investments at the bottom. They take out 29% APR personal loans. They double down on risky trades hoping to win it back. Desperation destroys logic. Scarcity compresses intelligence. Your brain in survival mode is not a rational investor. So you don't gamble, you stabilize. Scene 6, shift from investor to operator. Visual, laptop open, freelance platform, delivery driving, hands working, phone ringing. Voiceover, when capital is low, skill becomes currency. You shift from investor to operator. Forget prestige, focus on velocity. What can you monetize in 7 days? Freelance skills, consulting, tutoring, gig work, technical services, selling expertise. If you generate even $1,000 in the next 30 days, you extend your runway. That breathing room restores clarity. Clarity restores control. Part 3, the silent threat. Visual, dollar bill fading, inflation percentage overlay, grocery prices rising. Voiceover. Now we address the silent threat, inflation. If inflation runs at 4 to 6% and your savings earn near zero, your purchasing power shrinks, quietly, relentlessly. $10,000 today is not $10,000 5 years from now. Cash is safety, but too much idle cash is erosion. Balance is strategy. Scene 8, layered defense system. Visual, blueprint-style animation, 3 layers building upward. Voiceover. Financial resilience isn't about predicting crashes. It's about building layers. Layer 1, liquidity. 3 to 6 months of survival expenses. Accessible, stable, not speculative. You don't invest your oxygen tank. Layer 2, income diversification. One job is not security, it's dependency. If one income stream dies, what survives? Dividends? Rental income? Side business? Freelance retainers? 2 to 3 reliable streams change everything. Part 4, internal threats. C9, lifestyle inflation. Visual, new car purchase, luxury apartment, vacation Instagram posts. Voiceover comes the internal threat, lifestyle inflation. You earn more, you upgrade everything. Your income rises, your expenses match it. You feel wealthier. You are not. Wealth is the gap between what you earn and what you spend. Protected, invested, compounded. Scene type, the compounding machine. Visual, graph rising slowly over 30 years, time-lapse calendar flipping. Voice, invest $1,000 a month at an average 8% annual return. In 20 years, roughly $500,000. In 30 years, over $1 million. Not because you're lucky, because you endured. Compounding only works if you survive the early storms. If every downturn forces you to sell, you reset the clock. Part 5, becoming anti-fragile. Scene 11, risk management. Visual, split screen. Left, over-leveraged trader stressed. Right, calm investor reviewing plan. Voiceover management is not boring, it's power. You don't go all in, you don't over-leverage, you don't risk rent money. Markets don't care about your belief, they care about liquidity, they care about interest rates, they care about fear, and fear spreads faster than logic. Scene 12, adaptability. Visual, AI automation, office layoffs, person learning new skill online. Voiceover, corporations automate, AI replaces tasks, entire industries shrink. If your income depends on a task that software can replace in 5 years, you're on borrowed time. Resilience is professional. Communication, sales, problem solving, technical literacy, skills that travel across industries. Part 6, the transfer of wealth. Scene 13, the next crash. Visual, market headlines again, red screens, but this time, calm individual reviewing investments. Voiceover, now imagine the next crash, but this time you have 6 months of cash. You have diversified income. Your expenses are controlled. You are not panicking. You are shopping. Downturns transfer wealth, from the over-leveraged to the liquid, from the emotional to the prepared. Part 7, systems, not hope. Visual, whiteboard labeled You Inc. Revenue, expenses, assets, liabilities, risk exposure. Most people drift financially. They hope things improve. Hope is not a strategy. Structure is. Automatic savings, automatic investments, quarterly financial audits, continuous skill upgrades. Systems remove emotion. Final part, the decision. Scene 15, the warning. Visual, news anchors shouting, market red, then fade to black. Voiceover, the next crash will come. Another inflation wave will come. Another round of layoffs will come. The question isn't if, it's whether you meet that moment as prey or prepared. Right now, your financial life is either fragile or reinforced. When headlines scream and markets bleed, you won't have time to learn discipline. You'll either have it or you won't. And that difference will decide whether you stay broke or build leverage while everyone else is trying to survive.